folks, Dan Frio here in the Mortgage Update. Today is May 29th, 2020. So let's get on it. Today we had kind of a flat market on the stock markets. We had a fantastic day for mortgage-backed securities. And then we have some of the economic calendar coming up here in the video. I know it's month end and the light switch has turned back on here in Chicago. We can go out to dinner. Well, we got to sit outside. And people are going to be back to work next week, so that should open up the economy. And my recommendation or prediction is going to be we're going to see a pretty robust bounce back in the economy. That's what I'm saying. Could be wrong. Put your ideas down below. Let's see if we can have a contest going here and see who's right, see who's wrong. So it's Friday. It's the last day of the month. A lot of you guys want to get out of here. Probably payday for a lot of people. So let's get at it. If you're a realtor, you're a mortgage person, you're in the market to buy a house, refinance, you got to watch this. So let's get on to it. Let's see what's happening in today's market. So we follow this number right here. Why we follow this number right here is this number right here. Hold on one second. Is the number that actually determines mortgage rates. Believe it or not, it says right here, MBSs, mortgage-backed securities. It's a bond that trades that determines mortgage rates. That's why we follow it. We don't follow the 10-year Treasury. We don't follow the 30-year Treasury. We don't follow gold. We don't follow anything else. We follow this right here. Some of those other factors do play a role in what this number is doing, but it's not the determining factor with mortgage rates. So what happened today? Well, market did very well, up 17. There was a lot of surprises in Trump's speech today about China. They thought there was going to be basically a bloodbath there, but it wasn't. It was a pretty tame speech that he came out with that didn't really shock the markets, which was a good thing. Another thing's coming next week is Chairman Powell. He heads the Federal Reserve. He's going to speak next week. And they're expecting the speech from him to really start to signal. He's going to lay out a plan on what the Fed is going to do. He's going to give transparency to what they're doing. Because right now, what they do is they're coming in and they're buying up the markets to kind of have stabilities in the market, as we see it right here. And we love this. You know, I've been saying it for a long time. We like stability, and we've seen it for quite a bit. And that's been fantastic for mortgage companies. Again, you guys might not care what goes on with mortgage companies, but the more there's uncertainty in the market, the higher the rates. That's the easiest way I can say on how this is a much better environment than this. Okay, so that's that. So we love what happened today. I'm going to go through some other things with you right here. It's saying that the federal, it kind of talks about the stock market, what happened in the stock market. Really, it was a stagnant day there. Trump came out and said something about the World Health Organization and everything of that sort. But we did have some numbers that came in, and this is, I'm not saying there's a surprise here. The inflation numbers that we usually follow on my channel, if you've been a long-time follower, you know that I follow many things, and inflation is one of the key components that we follow. Inflation for the year now is 0.5% year over year. The Fed's trigger rate, or where they want to see inflation, they want it peaked out at 2%. We were starting to get a little bit hot about 6-8 months ago, and we started seeing inflation hitting in those areas. And now with basically the whole country being shut down, I didn't expect any difference in these numbers that did come out. So we only saw a 0.5 year over year. So that is giving the Fed a lot of leeway, saying, you know what, we don't see anything happening in the near future. Keyword there, near future. Personal income or consumption, or personal income came in, and it was actually not bad. But again, these things aren't surprising to anybody. The numbers that we're going to go through is inflation, core inflation, and that strips out food and energy. That's dropped 0.4, which is a big drop from a 1.7 to a 1. There's the area that I was telling you about. that it was creeping up to a 2% rate, and that's starting to scare everybody. Now we're down to 1. We're good there. The spending was down, no surprise there. And again, personal income was up 10%, but there's no surprise there because a lot of the lower earning employers or employees, I'll say, are the ones that basically got furloughed at this time. Upcoming events, there's not a lot of stuff here. Again, there's employment numbers and unemployment numbers and everything kind of come out. It's going to be no surprise. We all know the country is kind of decimated, and but that's that part of it. Economic calendar, construction spending and manufacturing numbers are coming out next week. No surprises that should change anything there. Same with payroll, same with manufacturing, same with job cuts, same with production, same all the way over. So nothing here should surprise the market. Real estate news, the pandemic squeezed it actually lowered home supplies. So meaning there's less people put their homes on the market, which may not be a bad thing, but you're probably going to see now that a lot of the country is starting to open up, there's going to be a lot of homes for sale. Conversely, there's going to be a lot of buyers. So I can see within the next probably 60, 90 days, we're going to see a huge activity in people buying, but there should be, the supply should increase as well as the demand. So this should stagnate and really not play any havoc on the markets. So that's what I'm seeing there. Right here, I apologize. I'm going to take back my phrase. The federal Chairman Powell is going to speak in a week and a half, not next week. My apologies. And he's going to come out and say, basically give guidance on what the Federal Reserve is going to do. That is only going to help help the markets because it's going to open up transparency and give us an idea of what's going on, what their plans are with buying mortgage-backed securities as well as buying bonds. So let me recap kind of some of the things that's going on and why we follow this. Is basically what the Federal Reserve has been doing is they've been buying mortgage-backed securities to stabilize the markets. And they've been doing a fantastic job at that. So kudos to them for that. They're going to actually come out and say, here's what our plans are. And that is going to give transparency. And the more transparent everything is, the more stability there is in the markets. So that being said, what I'd like to do is just say thank you. We had a record month here, and it's thanking you guys. Given watching my videos, you having the confidence in me and my team to be able to take care of you. Here's what I'm going to ask you to do: is if you're in the market for a mortgage, and you already have a quote, please send me that quote. It's called a loan estimate that you're going to receive from that lender. I'll go through it meticulously and come back to you and say what I can or can't do. Most of the time we can beat the lender in rate and fees or both. So rate or fees or both. And today we had one client that we looked at. We actually were able to get them the same rate and save just shy of about $10,000 in costs. That was just one client that I spoke with personally today. So we'd like you to reach out to us if you're in the mortgage process. If you have a mortgage right now and you want to see what we can or can't do, email me a copy of your mortgage statement. Let me see if I can pull up my website right here and give you some information there. If you'd like to reach out to me, please call me. You can reach me personally at 844-775-5626. That's 844-775-5626. Shoot me an email. Send me a copy of your mortgage statement. And in that, all I need is say, Dan, here's my mortgage statement. Here's what I'm looking to do. And my credit score is approximately this. I'll get back with you probably within the hour and say, here's what I can or can't do, or here's what I would suggest. And honestly, it's what I would personally do. I've done this for 32 years. I'm not in the position to give you bad advice. I don't want to give you bad advice because we get a ton of business from YouTube and you guys watching out there. So I'm hoping my comments are coming back saying, Dan did a fantastic job. His team was on it. He's this, that, and we can help out in what we did. We're not in here for the short term. Basically, we're here to help you and guide you through that mortgage process. You can reach me at D for Dan Frio, which is Frio at preferredrate.com. So that's dfrio at preferredrate.com. Or give us a call. Like I said, you can reach me personally at 844-775-LOAN. That should do it. It's Friday. I want you guys to get out there, enjoy the weather, enjoy the weekend. If you're looking for a house, let us know. We can even help you with a realtor. We can help you with attorneys. We can help you with title companies. If you're looking to refinance, we're here for you as well. So God bless. Thank you so much for watching. Thanks for helping us have a record month and being able to help more and more people every day. So take care and have a great and safe weekend. Bye-bye.